Good morning, everyone. In ABM 003, we are going to discuss describing inventory system. Before we start, what is a merchandising inventory? Merchandising inventory is the cost of goods on hand and available for sale at any given time. Merchandising inventory is also called inventory. It's a current asset with a normal debit balance, meaning a debit will increase and a credit will decrease. There are two methods of accounting the inventory. These are periodic inventory system and perpetual inventory system. First, we're going to describe periodic inventory system. Periodic inventory system updates and records the inventory account at certain and scheduled times at the end of an operating cycle. The updates and recognition will occur at the end of the month, quarter, and year. In short, the periodic inventory system relies upon an occasional physical count of the inventory to determine the ending inventory balance and the cost of goods sold. To calculate the cost of goods sold under the periodic inventory system is beginning inventory plus purchases minus ending inventory is equal to cost of goods sold. For example, Ventura Company has beginning of 200,000 pesos on January 1, 2018. She purchases of 500,000 pesos during the year of 2018. And its ending inventory cost of 100,000 pesos on December 31, 2018. So, 200,000 pesos plus 500,000 pesos is equal to 700,000 pesos. The 700,000 pesos, you will minus to ending inventory of 100,000 pesos is equal to 600,000 pesos. So, the total cost of goods sold is 600,000 pesos.
Good afternoon, everyone. I would like to discuss today is all about perpetual inventory system. Perpetual, as per definition, means never-ending, changing, or otherwise permanent. Perpetual inventory system allows the business to update the inventory records continuously for monitoring and controlling of in and out of goods. When a company uses the perpetual inventory system, the ending inventory should reconcile with the actual physical count at the end of the period, assuming that no theft, spoilage, or error has occurred. The account is adjusted for any inaccuracies is discovered. The account provides an independent check on the amount of inventory that should be reported at the end of. Cost of goods sold and inventory accounts exist all time. No purchase account, but the purchases are recorded in the inventory account. No purchase return and allowances account, but purchases return are recorded in the inventory account. Record cost of goods sold / cost of sale. Returns made by the customers are recorded by reducing the cost of goods sold and adding back into inventory account. There are two methods of accounting the inventory: periodic inventory system and perpetual inventory system. The periodic inventory system uses an occasional physical count to measure the level of inventory and the cost of goods sold, known as COGS. And the perpetual system keeps track of inventory balances continuously, with updates made automatically whenever a product is received or sold. So the primary difference between the periodic and perpetual inventory system is the perpetual system maintains a continual record of inventory transactions, whereas the periodic system records these transactions only at the end of the period. These are the advantage and disadvantage, and the perpetual inventory methods and formulas.
In ABM 004 or Business Finance, I'm going to discuss on how to prepare a cash collection budget. But before that, let us first define what is cash collection. So, cash collection is a function of accounts receivable. When we say accounts receivable, it means that we have something to collect or something to receive. Next is recovery of cash. Kapag nagpautang ka sa customers mo, it means that you have something to recover. You have cash to recover. And lastly, payment collection. From the word itself, payment collection, it means that you are going to collect the payments sa mga customers mo. In order for you to understand easily what is cash collection, just remember these three things. Next is we have two components of cash budget. We have estimated sales and estimated expenses. So when we say estimated, it means that we are assuming our sales and we are assuming the expenses that we are going to spend. Next is we have 5 elements of cash budget. We have beginning cash balance. We need to have beginning cash balance because we need it to start the business. Next is cash collections. This is where you start collecting payments because you are starting selling. Next is cash disbursements. Cash disbursements meaning it is the flow of money. Dito ka naglalabas ng pera. Fourth one is cash excess or deficiency. Excess means may sobra at deficiency meaning bumaba yung pera mo, which means it is negative. And lastly, ending cash balance. So when you have a beginning cash balance, syempre you also have an ending cash balance. So in preparing a cash collection budget, we have 6 steps to consider. The first step is identify the quarter sales by multiplying with the collection rate or percentage. The second step is add the beginning accounts receivable to each quarter cash collection. The third step is add the first quarter collection to the second quarter collection. Fourth step is add the second quarter collection to the third quarter collection. The fifth step is add the third quarter collection to the fourth quarter collection. And the last step is get the total collection for the year. So this is how you do the schedule of expected cash collections. So as you can see, we have the heading, we have the company name, schedule of expected cash collections, and the term for the year ending December 30, 2020. So we have here beginning accounts receivable, which is 50,000, quarter 1 to 4 sales, and total collection. So para makuha natin yung expected cash collection sa bawat quarter, we need to multiply the first quarter sales sa collection rate. So our collection rate is 70% and our first quarter sales is 100,000. So 100,000 times 70% is equals to 70,000. And that is our expected cash collections on the quarter 1 sales of the first quarter. Next, in order to get the second quarter of the quarter 1 sales, we just have to multiply the remaining collection rate to the first quarter sales. So 100,000 times 30% is equals to 30,000, and that is the quarter 2 of the quarter 1 sales. Just repeat the steps para makuha yung expected cash collection sa bawat quarter. After that, add each quarter sales to get the total collections of the year. Pagkatapos niyo po makuha lahat ng cash collection sa bawat quarter, ay get the total collection for the year. And that's how you prepare cash collection budget.
In ABM 005, we are going to discuss our overtime pay.
Overtime pay is the additional compensation payable to employee for services or work rendered beyond the normal 8 hours of work. It is computed by multiplying the overtime rate with the number of hours in excess of the regular 8 hours of work.
Overtime work is that any work performed beyond the normal 8 hours of work in one work day is considered as overtime work.
A workday is the consecutive 24 hours period which commences from the time the employee starts to work and ends at the same time the following day.
Overtime periods depend upon the day the work is performed, whether it's ordinary working day, holiday, special day, or rest day. For the ordinary working day, an additional compensation equivalent to his regular working rate lasts at least 25%. For the holiday, rest day, and special day, an additional compensation to the rate for the first 8 hours of holiday or rest day lasts at least 30%.
We are going to compute the overtime pay. Let's assume that the minimum daily wage rate is 350 pesos. The first that we're going to compute is how much the overtime rate per hour on ordinary day. First, compute the hourly rate. The formula of regularly rate is daily wage rate divided 8 hours. Then, transpose. Kaya magiging 350 divided by 8 hours. 350 divided by 8 hours equals to 43.75 per hour. Then, to determine the overtime rate per hour. The formula of overtime rate is regular hourly rate plus 25% of regular hourly rate. Then, transpose. 43.75 plus 0.25 times 43.75. The 0.25 is the decimal point of 25%. Equals to 43.75 plus 10.94. The overtime rate is 54.69.
In summary, on how to compute the overtime pay on ordinary day, on the rest day, and special day, on the rest day which is called the special day, on the regular holiday, on the rest day which is called on the regular holiday, were the same process of computing of overtime rates. They are different on the how to compute the regular hourly rate, because the regular hourly rate on the special day and rest day is 130%. On the rest day which falls as special day is 150% hourly rate. On the regular holiday is 200% hourly rate. And on the rest day which is fall on the regular holiday is 260 hourly rate.